Good morning, guys. We are literally just a couple of minutes before 8 o'clock on Tuesday, the 7th of June 2022. I just wanted to show you what happens if you submit a trade outside of market open hours. And I'm going to go ahead and submit the order for our £120 weekly investment in the Vanguard S&P 500. As you could see there very briefly, the order has been placed. We'll see that in the pending orders bit here. So as you can see, it's a market buy that we have done, so it will wait until the market does actually open. Now, as you can see, yesterday the S&P 500 rose by 0.81%. At some points along that yesterday, it did go higher, and as things stand, we are at just below break even. So it'll be interesting to see if there is much of a move this morning, what price our order executes at. So currently the sell price noted, the important price should be the buy price, I suppose, 62.766. Sell price is currently 62.713. And our average is currently sitting at 63.18. If you've been following the journey, you'll see that our average price has decreased because since we began, we have had basically a continuing downtrend in price. However, I do think that there are signs that things may be starting to turn around, although it is not certain just as yet. So let's see what happens at 8 o'clock when our market order executes. You'll see that line will disappear, and we will see then the value of the investment should increase. The average price may change, just depending on the amount of the move in the market, and whether our trade executes at the start of the move or at the end of the move, so to speak. It's one of those things you're just never exactly sure what's going to happen. There we go. So the market has opened, the trade has executed, and the market is down 0.5%. So let's just see what price we got. Okay, so we bought 120, and the fill price was 62.47. So actually very slightly lower than where it's sitting at just at the minute. I think we were lucky that time, to be honest. I think we might have got a bargain there. But guys, honestly, if irrespective of whether you trade during market open or market closed, realistically the most important thing is to invest consistently, maybe not as frequently as weekly. Monthly should be sufficient for most people, although I suppose if you did have the ability to save a high percentage of your net income, you might choose to invest more frequently than monthly. But given the time frame that the majority of people are going to want to be doing this over, if you cannot automate the process, and it's too much of a hassle to be logging in to do it every week. There's no harm in doing it monthly, and I personally prefer to trade when the market is open, but you can do it either way. Obviously, as you can see here, the market is open now, and currently we're sitting at just under 1% now after that move downwards this morning, and we'll see how it goes from there. But in terms of the dollar cost averaging effect, it has worked actually quite nicely for us in terms of bringing down the average price, and obviously as price rises and you continue to invest, dollar cost averaging works in the other direction as well, in as much as price rises and you continue to invest paying more as price rises, then your average price will increase. So really you don't really get to see the full advantage of investing in the S&P 500 at the very start. It would only be after you have a significant amount invested, and probably after there's a significant amount of time has already passed, that you should really start to see the compounding interest effect. Guys, I'll leave it there for now. If you enjoy the content, please feel free to subscribe, and follow the journey. Have a great day.